Welcome to Game Trader Live for the month of August 2025. I'm your host, Asif Khan. I'm the CEO, Editor-in-Chief, EIEIO here at Shacknews. EIEIO actually stands for something. It's Extremely Intelligent, Extreme Intelligence Officer. It may sound like a made-up title, but it's actually designed to increase Shacknews' valuation. It's already doing that. So let's get into the show. Sorry, I was running a little late. We had a bunch of random stuff pop up that I had to handle on a Friday afternoon. Let's get into the charts. We're going to talk about Nintendo a little bit later. I like to start the show by looking at some, market charts. So we got the S&P 500 here, the SPY ETF, closing the month green, hit an all-time high earlier in the month, actually earlier this week. So we are, if we zoom out and we look at the long term of this chart, boy howdy, we are in some elevation here. This little hill here was the dot-com bubble. This little one here was the housing bubble. And this thing to the right, this is the, I don't know what the hell you want to call this bubble, but it does not appear to be over yet. This is a show where we look at charts. We also talk about individual stocks, their results. But we like to do this at the end of the month because we can look at monthly charts. So each bar here is 1 month. If you look at this bar here, that was April when the tariff panics really peaked. And since then, we've had 4 consecutive up months. We're still in the middle of a quarter. I guess this is the back third of the quarter. We've already had 2 months out of the 3. So that outside quarter and up buy signal is still in effect in the S&P 500. But you do only have 1 month left. So we'll see what happens. I'm not here to predict anything, but at times I will give you ranges and stop prices for each trade. I haven't had a chance to prepare for this, but we're going to kind of take a look as we go. And yeah, it's the Fall of Capitalism special. So happy Fall of Capitalism, everybody. And if you're wondering why, stay tuned. Let's see. S&P 500. What about the Qs? That's the NASDAQ 100. Where Qs? There Qs. Qs did not close towards its highs, so we're sitting here at 569.99. This is the NASDAQ 100 ETF. I kind of want to highlight the holdings in this thing. Let's see. So the holdings. Come on. NVIDIA represents 9.95% of the NASDAQ 100. Microsoft represents 8.59%. Apple represents 7.86% of the NASDAQ 100. Amazon is sitting there at 5.56% of the NASDAQ 100. Broadcom is now 5.43% of the Qs. Might be a semiconductor company to pay attention to, as they are kind of tied to smartphones. They make a lot of the chips that Apple licenses and other smartphone manufacturers license. Just underneath Broadcom, you have Meta platforms, Facebook, Instagram, WhatsApp, Oculus. That's the company. I guess they don't call it Oculus anymore. Anyway, Meta is only weighted at 3.69%. Netflix at 2.92%. Tesla at 2.85%, and then both Google stocks, GOOG and GOOGL, are, if you combine the two, they're kind of in the top 5, but there are 2 different classes of shares, different voting rights for each stock. So yeah, that's your top 10 holdings of the NASDAQ. I want to point out that 9 companies represent 52% of the weighting in the NASDAQ 100. So The other 90 companies, 91 companies in the NASDAQ 100 they only represent 48% of this ETF. This is a very important ETF to pay attention to because obviously technology has been driving a lot of investment recently, especially in artificial intelligence. We had a big quarter out of NVIDIA this week. We'll get to that in a second. But yeah, let's keep looking at the indices. The one that I don't really care about is the Dow Jones. I usually look at the diamonds. The Dow Jones closed towards its highs this month. It had an outside month to the upside, so you've had a buy signal above last month's high of 450.25. It broke out above that, so now you have a signal where there's no equilibrium. An outside bar is quite the opposite. It went underneath the previous month at its lows, and it went above the previous month in its highs. When that happens, you have a brand new broadening formation. So the buy signal would be above on the ETF 457 and 87 cents, and the sell signal would be below 433 and 40 cents. We're obviously closer to the highs, and there's nothing to say that we can't go outside again because clearly the Dow Jones is not in equilibrium on the monthly chart, which the month of August, the trading month of August basically ended today. So you have a quarterly chart that's it broke out of this range that it was kind of grinding at for almost the entire year. So the Dow Jones is looking good. It's up on the year. It has an outside year to the upside above last year's all-time high of 451.55. So there's another stop for your buys here. But yeah, you would have a buy signal above that same 457.87 level on the yearly chart, and a sell signal all the way down at 366.32. So like I said, we're pretty close to the highs on a lot of these charts, so you're probably more likely to see buy signals appear. But I'm not here to predict anything. I'm just here to tell you what's going to happen if a stock or an ETF gets above a certain price point or below a certain price point. This is a style of technical analysis that was taught by Rob Smith, who passed away a few years ago. It's called the Strat. If you go on X the Everything app, formerly known as Twitter, and use the hashtag the Strat, you'll be able to find a bunch of people talking about it. I also recommend just Googling Rob Smith, the Strat, and checking out some of his YouTube videos. He has a lot of, even though he's gone, he has a lot of very informative videos on his YouTube channel to help people that want to learn more about technical analysis. So yeah, that's the Dow Jones. Actually has some interesting signals on both the monthly chart. Once again, sell below 433.40, buy above 457 and 87 cents, and those would be your stop loss areas too. So if it comes back within that range, you sell it. You don't stay long, or else you will get chopped up and spit out. And in the same way, if you were to short the Dow Jones below 433.40 and it comes back above that level, you should buy to cover. That's your stop. Try to mitigate your losses in this market. We're going to look at the small cap ETF here. This is another outside bar to the upside. So this is a laggard on the year. Up only 6% on the year, when you can 6.5%. When you compare that to the performance of the Qs, which is up 11.48%, or the SPY, which is up 10.05%, or the Dow Jones, which is up 7.24%. The Russell 2000, which represents the small cap companies, is only up 6.5%. So are we about to see some catch-up being played here? Or what? Well, let's see. So you have an outside month. Last month's highs were 226.71. Low was 214.15. The high was broken to the upside. It was actually broken down below that. So you would have a sell signal on the IWM ETF below 212 and 34 cents per share, and a buy signal above 237.02 per share, currently trading at 235 and 32 cents, so we're obviously closer to the highs than the lows. This is sounding like a trend in a lot of these charts. Because obviously you had outside bars in some of these stocks, some of these ETFs. You didn't really have one in the NASDAQ. You had one in the Dow Jones, and you didn't have one in the S&P, but you do have one in the IWM. Now, it's important to note, IWM and, as they call it, the diamonds, the Dow Jones Industrial ETF, both had been laggards this year, so maybe there's a little bit of catch-up going on, and perhaps there is a bit of rotation happening out of some tech companies that have been big winners this year, maybe into some more boring and stodgy companies that are in the Dow Jones. If you want a reminder of what trades in the Dow Jones, I can read off the list as I tend to do. Let's see. The Dow 30. Amazon, American Express, Amgen, Apple, Boeing, Caterpillar, Cisco, Chevron, Goldman Sachs, Home Depot, Honeywell, IBM, Johnson & Johnson, Coke, JP Morgan Chase, McDonald's, 3M, Merck, Microsoft, Nike, Procter & Gamble, Sherwin-Williams Company, Travelers, United Health Group, Salesforce, NVIDIA, Verizon, Visa, Walmart, and Disney. Those are the 30 companies in the Dow. There's only 30 companies in the Dow Jones. They like to say that it's the best way to approximate how the U.S. economy is doing. But if you look at those companies now, a lot of them are international in nature. Most of them get the majority of their earnings from overseas. So I'm not sure how good of an indicator the Dow Jones even is anymore. I tend to value other ETFs or other markets better. I think the S&P 500 is really the one to pay attention to. It's the one that Wall Street pays attention to, like hedge funds. They manage their performance against the S&P. So if you're doing, let's see, year to date, I think it was like 11 or 12%. Yeah, it's up 10.05% on the year. So if you're doing worse than that, you might have some redemptions coming this fall if you're a hedge fund. I do want to point out something that I think is a bit it's something that people should be paying attention to, I guess is what I'll get at here. The end of de minimis shipping went into effect today. President Trump removed this exemption that allowed low-value packages to arrive in the U.S. without trade duties. So any international businesses that like you were ordering stuff from that were using their local post offices to ship will not be coming here. This is 92% of all cargo that arrives in the United States, up to 4 million packages per day. And the new costs to small and medium businesses were expected to be as high as $71 billion. Tariffs are now universal, is what one person working at a loading dock had to say to CNBC. Yeah, this was Nunzio de Filippis. Nunzio had to say, when I think about the de minimis change, the message is clear. Tariffs are now universal, regardless of value. Every package counts. That's a major change in how global e-commerce has operated for the last decade. So yeah, a lot of small businesses are going to be impacted by this, not just here, but overseas. And it's going to affect air freight. Deutsche Post, DHL Parcel Germany, both divisions of DHL stopped U.S.-bound shipments earlier this week. This is what the CEO of DHL had to say. For shippers, this brings increased costs, complexity, and the need to adapt shipping setups to comply with new customs requirements. They may also face longer processing times and additional administrative steps when importing low-value goods. So that's not great. Our main priority remains to protect our core service commitment to customers and to minimize any disruption that arises from changes in tariffs and trade policy while remaining compliant with these new regulations. So we've seen a lot of countries pausing shipments to the United States, and I just wanted to point that out as a new risk to the economy. We got a chatter asking, Donovan is asking, are we cooked? Like us? You and me? Probably not. Is the economy cooked? I don't know, Donovan. Do you think 92% of shipments to the United States is a big deal? I do. So I guess tune in next month to find out just how cooked we are. I'm going to say yes, we're cooked. But we don't know, are we well done? Is it medium? You know what I mean? Like if you were to cut me open and look at my meat right now, I know you could clip that out of context. How pink is it, right? Or is it rubbery meat? Exactly where are we on the meat scale? These are the deep questions that we ask here. But yeah, I can't imagine it's good that 92% of packages. Am I tired? Yeah. I'm tired of this bullshit, Lucci. Thanks for joining us. It's Friday. I'm not a fan of these Friday Game Trader streams because it's a long day here at Shacknews. Had a lot of stuff come up today. And I was up late last night helping Sam get some Destiny Rising gameplay uploaded. So yeah, I'm a bit tired. Appreciate you noticing that. But I'm here to talk about stocks. That's what I do. I do this at the end of every trading month, and instead of sitting on this and doing a stream on Monday, which would be my holiday, I thought, you know what? Why don't I spend an hour with the folks at home talking about stock charts and the recent news of the day, which is people can't get shipments. It looks like Spirit Airlines just filed for Chapter 11 bankruptcy for the second time this year. Sorry, we have a little bit of news happening here. I want to point out something. We are seeing more bankruptcies year to date here in America than we had in the year 2020. So more businesses have filed for bankruptcy in 2025 than in 2020. They did try to get acquired by JetBlue, but yeah, this is now the second time that they have filed for bankruptcy protection. Since emerging from our previous restructuring, which was targeted exclusively on reducing Spirit's funded debt and raising equity capital, it's become clear that there's more work to be done. And many more tools are available to best position Spirit for the future, said Spirit CEO Dave Davis. That's a funny name. Yeah, they're in trouble. Stock is down 72%. In the last month. That is not great. What is their stock chart? Anyway. Oh, I made an oopsie. There we go. Gotta move this back over here. Let's see. What is the Spirit Airlines chart? That's not good. My professional opinion is this is a bad chart, you guys. Yes, the COVID year of 2020. I will not book on with the budget airlines right now, says Johnny Chugs. Not only is the customer service really bad, but then there's stuff like this. And then you also have flight attendants going on strike, all sorts of stuff happening. But I digress. Let's look at the semiconductor holders ETF. So we went through the markets already. Let's take a look at what's going on in the land of semiconductors. Definitely a sell-off this week in the whole industry. on the back of the Nvidia results, which were not that bad, to be honest. But yeah, the stock kind of got clobbered this week, down 3.5%. It was down something like 3.5% today. So most of the losses of the week occurred today. Other components in the SMH are AMD had a pretty rough week, but it was inside week, not inside month. But had 3 consecutive months of gains and then kind of sold off a little bit here. Still has that outside quarter and up buy signal. I think that's true. Yeah, that's true of the SMH as well. So the whole semiconductor industry is seeing a bit of volatility, but it's sitting at all-time highs as it does that. I did see Marvell got clobbered today. Marvell now down on the month. I should probably look at what happened there. It was on my, I have a new highs, new low list. And I saw it was hitting new lows almost all day today. But yeah, also down, what was it, 18.6% today? That's pretty brutal. Let's see if there's any news. Problem with Marvell is it's spelled the same as, or no, it has an extra L. They missed their Q2 numbers last night. So it's a data center company that did not do that well. And you see these high-flying tech companies, when they miss their results, they get punished. Or when they miss expectations of their results, they get punished. But yeah, this is one of those stocks that was flying pretty high on the back of AI hype. So I think that might have spooked the SMH as well. But yeah, this is an ETF that has, actually, I feel like I'm doing this today. I'll break down the SMH holdings while I'm at it. Because we can look at stock symbols, but if we don't know what's actually inside of them, what's the point? You know what I mean? So this is the SMH. Where is the holdings? Here we go. Surprising nobody, 21% of the SMH is Nvidia. 10% is Taiwan Semiconductor, followed by Broadcom at 9.56%. AMD is weighted at 6%. Lam Research at 4.4%. Analog Devices at 4.27%. ASML, which someone brought up during the Nvidia call, is sitting here at 4.25%. Micron at 4.11%, Texas Instruments at 4%, KLA 10 Core at 3.95%, Qualcomm is 3.4%, and Synopsys is at 3.8%. Yeah, anyone notice something that's missing? Anyone notice what was missing from my list of the most influential semiconductor companies? Anybody? Bueller? No? It's Intel. Intel is not when you think about semiconductors right now and you think about who's at the cutting edge of semiconductors, you don't really think of Intel, do you? Because Intel has missed almost every important trend in the last 15 to 20 years. And now, for some reason, the United States government has taken a 10% stake in Intel. Donald Trump's administration has repurposed the CHIPS Act, which was supposed to be providing grants to build factories in America to semiconductor companies, passed during the Biden administration. They have repurposed grants to now become equity investments. And Intel diluted shareholders by issuing shares in exchange for grants that were given to them originally during the Biden administration, but the remaining $3 billion was sent to them. I think it's around $11 billion for a 10% stake in the company. The stock is currently trading at $24.50, $24.36 inside month. So rallied on, sorry, Inside Week rallied on the news of the government investment, sold off on the actual dilution of it. The company came out and also stated that they see a risk to their international contracts as a result. Intel loses money making chips in America. Last year, they lost $18 billion at their U.S. foundry division. So the idea that they're going to turn around this company by building things in America, I don't know if that's going to work. But that being said, this brings up a better something I've been struggling with this entire month. When Donald Trump keeps changing the rules of the economy any given week, any given month, it becomes incredibly hard to predict where things are going. I want to warn all the viewers that this is maybe the hardest market to trade that I've ever seen. You can have every logical reason behind you, but then something stupid could show up and change your thesis. So if you watch this show for a while, you know I've been bearish of Intel basically since I started doing this show. But now that the government owns 10%, who's to say what's going to happen next? Who's to say what's going to happen from here on out? If the government can just take stakes in companies, what's to stop them from giving preferential treatment to said company? It's a different era of the market, and I do think it's the death of capitalism. Not that I want to make it abundantly clear. I'm not lamenting the death of capitalism. I just find it very strange that the Republican Party, the party of the free market capitalism, is the party that has brought the death of capitalism to the United States. Usually, when the United States government becomes a shareholder of a company, it's because things aren't going well. 2009 with GM and Citigroup. 2008 with all the banks and Fannie and Freddie. These were dire situations where the government claimed that they had to bail out these companies and they had to provide equity, or else the whole market was going to crash. It's horseshit because in the 90s, during the savings and loan crisis, we created a receivership bank and then saved all the deposits from the banks, took the deposits, put them in a government-sponsored entity that was safe, and then rebuilt the financial system and then started selling these deposits to these new banks. But in 2008, we decided, you know what? Nah, we're just going to start handing money. $700 billion was handed to the financial sector in the month of October of 2008. Now, Lucci is saying the next president will have a lot to clean. That's if there's ever another election here in the United States. I know it sounds like hyperbole, but if I told you that there were going to be National Guard troops going to Chicago this weekend, you'd probably say that I'm being hysterical. That's just what's happening in the world now. But yeah, I guess my point about Intel, it doesn't matter what I think about the fundamentals of Intel. The government now owns 10%, and they can create demand for their products. Although Intel's done a terrible job of diversifying their platform. Their lunch has been eaten by ARM Holdings and by Qualcomm and by Samsung and by AMD, which is wild, and by Nvidia. So here we are. It's 2025, and the Republican-led government is taking stakes in private companies. They also indicated that they're interested in investing in defense companies, which seems like a conflict of interest. Like, I don't know. If you were a shareholder of a company that built missiles, would you fire more missiles to create more demand for those missiles? Food for thought. But yeah, Intel. Doesn't matter what the fundamentals are anymore. Which makes it very hard to judge. So I don't have anything good to say about the stock, but I don't have anything bad to say about it either. Trump Intel deal. The Financial Times are reporting that the Trump Intel deal was designed to block the sale of a chip making unit. There's a rumor that the failed plant that was being built in New Albany, Ohio, was going to be sold to Taiwan Semiconductor, but Trump, in an effort to get a win, bought it, at least 10% of it. So they claim that it's a non-voting stake, but if one day the president just feels like doing something, I don't know if you've noticed, he just does stuff. That being said, this chart on the monthly time period has an outside signal. So instant broadening formation here. It would be a buy above 26.53, which was the August high. And it would be a sell below 18.97, which would be the low of August. Intel is slightly up on the year. Actually, no, it's up 21% on the year. And it's up on the quarter by 8%. Also no, not outside quarter. Slightly above last quarter's high. So yeah, there's Intel. If the government can just start buying up shares of companies, what's to stop them from doing it again? So yeah, it just shows you it's a dangerous market to be short anything either. Which leads me to another concern I have. Earlier this, I want to say, when did this happen exactly? BLS head out. Sorry, give me a second here. 4 weeks ago, the President of the United States fired the head of the Bureau of Labor and Statistics because he didn't like the jobs report. He then put someone in charge of the Bureau of Labor and Statistics who doesn't believe in reporting unemployment numbers every month. So tune in next week to see what the jobs report will actually say. But once again, if the government is interfering with the reporting of GDP and inflation and employment data, those are pretty important data points that I use when determining risk in the market. I'm not entirely sure what to do anymore. It's really that's the real problem. That's why I'm calling this the fall of capitalism, because at least Republican and Democrat presidents of the past didn't just complain about the results and fire people and put people in that would fake results. This is the kind of shit a banana republic would do. And between parades, military parades for our leader, and the militarization of the police in D.C., I think this is a time to assess one's risk. But at the same time, when I asked myself when the Bureau of Labor Statistics head was fired, like, what would I do if I liquidated my portfolio right now? Would I put it in dollars? Because the dollar isn't even safe. Earlier this week, one of Trump's sons said he thought that Bitcoin's going to $1 million per coin. If Bitcoin goes to $1 million, what that means for the dollar, what that means for inflation, what that means for the U.S. economy is pretty terrifying. And it wouldn't be safe to be sitting in cash. But is it safe to be anywhere? Is it safe to be in bonds right now? Is it safe to be in equities? What equities are safe? Even some of the more stodgy, boring companies, right? Like a Walmart or a McDonald's. Consumption in the United States is going to go down because the cost of everything's up and no one's wages are going up as fast as inflation is. So just logically, even if Donald Trump fudges the numbers, it's going to be, you're not going to be able to hide just how bad things are. If there, yeah, it's like, yeah, you can tell me that the GDP grew 3%, or I could just drive down the street in Canton and see every restaurant is struggling because the commodity prices have gone up and restaurants don't have a huge profit margin. So when you have vegetables up 40% from the prior year, you're going to see companies go under. If meat prices are rallying, if feed prices are going up, you're going to see more companies go under. We're seeing grocery stores close here, and we're seeing restaurants close here. Those are the first two areas that we're seeing a lot of pressure. But I think you're going to see it in any consumer discretionary stock. Tech companies, and thank you for the combo. 100 bits. We appreciate it. But yeah, I think we're going to see a lot more companies suffer going into the end of the year. This is definitely adversely impacting small businesses. So local grocery stores are going under, local farms are going under. And I just find it very frustrating because I don't know. Normally there's a safe haven during a recession, but we have a government that's in denial about the recession and is not going to let its own reporting agencies tell you that we're in a recession. So it's even more important to pay attention to the Federal Reserve, which, by the way, the Trump administration is interfering there too, coming after the only black person on the board of directors of the Federal Reserve, trying to get her indicted for mortgage fraud when apparently it was a clerical error made on a mortgage application. So the president and his administration are actively interfering with key parts of the economy, be it the reporting agencies or the policies like the Federal Reserve Open Market Committee, the people who set interest rates here in the United States, the people who determine what level of bonds we're going to buy to keep the treasury market going. So how is this all going to collapse? I think is the question, right? The things that I'm watching are the U.S. Treasury market. Is the long end of the curve, the 30-year, the 20-year, is it selling off? What's going to happen on the short end of the curve? Are interest rates going to keep going up? We did see a inflation number above 2%, but the Fed just told us, the Fed chair, Jerome Powell, spoke at Jackson Hole, Wyoming. They have this annual meeting there. He spoke about interest rates and he spoke about inflation. He said they're not paying as much attention to inflation and they're more focused on maximizing employment. Unemployment's been pretty low here in the United States for about 4 years, 5 years, basically coming out of the lockdown of 2020. There's a lot of demand for labor. But wages haven't gone up enough. And for the Federal Reserve to act like they don't need to worry about inflation after the inflation we've seen over the last 5 years, be it during the Biden administration, the first Trump administration, or this Trump administration, it's a very simple thing. Everyone's costs are going up, and no one's wages are going up. So consumption's going to go down. So watch the bond market, watch the corporate bond market, watch equities. Actually, sorry, before we watch the corporate bond market, watch housing. And we're starting to see weakness in some hard housing markets, like Miami, where foreign buyers have kind of stopped showing up. Las Vegas is another place like that. And I can tell you Canton, Ohio is not a hotbed of real estate. It's kind of struggling too. So there are, I would say, watch bonds, watch the government bonds, watch real estate, watch corporate bonds, then watch equities, and then start looking around and just kind of assessing what's happening in your own damn neighborhoods. But yeah, I don't mean to be so dire here and sounding the alarm, but it's not that I lament the death of capitalism. It's just I'm shocked that it's coming from the right wing as opposed to the left wing, people who say billionaires shouldn't exist. It's odd to see billionaires destroy the system that made them billionaires. I don't know how else to put it. Let's look at some charts. Apple. Tim Cook kissed the ring. He went to the White House. He gave Donald Trump a piece of glass that was made in Kentucky. And the stock went up. So that shows you cause and effect, right? It's an outside month for Apple, so you would have a buy signal above the August high of 235 and 12 cents, and a sell signal below the low of 201 and 50 cents. Apple has an event that they announced, I believe it's September 9th, Um, they're expected to show off new iPhones, maybe new iPad. There's a rumor that they'll have a foldable phone announced. Curious to see what they have to say about AI. A lot of rumors around that company. Maybe they're going to make their voice assistant run better by contracting Google to do so with their Gemini platform. But yeah, outside month in Apple. And it just shows you that if you kiss Trump's ass, he will give you exemptions on your products. AMD. No real signal on the monthly chart. Still have an outside quarter and up above 147 and 75 cents. So we are trading at 162.45, off of the highs, but still materially above the lows of the year, which were 76.48. Talk about a volatile year for AMD. But yeah, they had a decent quarter. On the monthly chart, Amazon there's no actual signal here, just kind of churning around. Yeah, nothing really to call out on Amazon. Monthly. ARM Holdings attempted to get into a RevStrat situation, did not. Inside month last month, basically flat on the month of August. A lot of movement, but if you fell asleep at the beginning of the month and you woke up at the end of the month today, wouldn't notice too much. Is trading inside quarter, so that's a little bit different than some of these other ones. You had an inside quarter and down outside month, followed by a reversal back inside of there, and then another inside quarter. Quarter's not over yet, so come back in a month and we might have some signals here. Definitely struggling at ARM Holdings right now. Let's see. Google. That's a good looking chart. Google's closing on its highs. I think they're kind of getting their shit together when it comes to AI. You had an outside quarter, it sold off, got back inside of it, and then it took out the other side. So you have a compound engulfing of this. So, yeah, things are looking pretty good over there. It's near the highs of the year, so really, you're just looking for a breakout above 214.65 cents. I posted a video on social earlier this month where I said that I think in the AI race here in America, Google is maybe best fit to win. It seems like a company like Facebook is struggling. They've been issuing pay packages to kind of poach people from OpenAI, and some of those people have already quit. They're already reducing the headcount at Meta's superintelligence division. So I'm not entirely sure what's happening at Facebook with respects to that, but we are seeing a resurgence in Google shares. I already mentioned Intel. And like I said earlier, Intel's like the GM of the semiconductor industry. So I don't know why they picked that one, but they did. There's that Meta chart. Red on the month and unchanged on the quarter. Is this an outside? No. Yes. Outside quarter and up, but it is sitting right inside of the top of that range. I'd say come back next quarter. But yeah, just from my own gut, I just don't. I've never liked Facebook. I've made some money shorting it in the past. I covered it after the fact, though. I covered it around here. So it has run since then. You could have bought it for less than $100 a share, and it's sitting at $7.37 now. One of the largest companies in the world. They do have a lot of content, but when you think about like what Facebook owns versus what Google owns, like what's more valuable? The content that Google gets from your Gmail and your search history and Google Maps and Google Images and Google Drive and Chrome, like all that data, and YouTube, like all that video data. All the Waymo stuff they're doing, like, what's more valuable, Google's data or Meta's data? Like, yes, Facebook owns Instagram. That means they have a lot of pictures of people and a lot of pictures of food, a lot of pictures of pumpkin spice lattes, a lot of reels, a lot of vapid reels of people regurgitating content. Hey there, Amelia James. Welcome to the chat. So yeah, I if I were a betting man, I'd say Google probably going to do better than Facebook in the near future. Just living in paradise here in Canton, Ohio, Amelia James. So yeah, let's look at Microsoft. Inside month for Microsoft. So you have a potential signal here. It would be a buy signal above the high of August, 538 and 25 cents. A sell signal below 498 and 51 cents. In the case of Microsoft, we're definitely closer to the lows than we are the highs. It had an inside week, and down. And now we're sitting down here. Microsoft has invested heavily in AI. And they've gone on the record as saying they don't know when it's going to be a profitable enterprise for them. Netflix actually had a red month. Tried to find some footing here. Quarterly chart. What's my interest? What do you mean? What am I interested in? Still cooking an inside quarter on Netflix, and sold off on a pretty solid earnings report. They're doing pretty well over there at Netflix, if you ask me. Kind of dominated the whole streaming platform. I was there in 2009 at CES when the stock was $4, and it is now at $1,200. I do think Netflix is doing quite well. We're going to skip over Nintendo for now. Nvidia, largest company in the world, unchanged on the month. They just reported earnings. I don't know if you saw, earlier this week we were streaming earnings results. You can check it out on our YouTube channel if you want to see my reaction to the results in real time. But I did see an interesting story that came out after the fact. I was in our community Discord. We have a channel where we talk about markets. So yeah, if you want to check it out, by all means, I highly recommend joining our Discord for discussions like that. But yeah, here we go. I thought this was pretty interesting. Nvidia's two mystery customers made up 39% of their revenue. So, two companies. Customer A, 23%, and customer B, 16%. So who do we think they're talking about here? I think it's probably Microsoft and Amazon. Because they said the two of the largest cloud service providers on Earth. And Microsoft has Azure, and Amazon has AWS, Amazon Web Services. Powers a lot of the web. It seems like those would be the two because Google is making their own chips. And it wouldn't be like they're unable to sell to China. At least in this last quarter, they weren't selling to China. They did say that some of their customers have achieved or have gotten some licenses allowing them to sell to Chinese manufacturers. But I did find this interesting. Hey there, Rumpo Plays. There's only a couple of companies that they could be talking about here. The two mystery customers, in my opinion, are probably Microsoft and Amazon. What do I do for a living? Huh. Isn't that an interesting question? What do I do for a living? There's like what I do, and then there's what I do for a living. Does that make sense? What I do most days is run shacknews.com and the accompanying social media platforms, like this one right here. It doesn't really pay the bills. In fact, I haven't paid myself. I've been working at Shack News. I think next month is the 11th anniversary of me becoming CEO. I don't take a salary at Shack News because it would literally be like taking money out of one pocket and putting it in the other. I wouldn't recommend that. So I'd say what I do is I am an entrepreneur and an investor. One of my investments is Shack News, and I'm heavily involved in the day-to-day operations of that. But what I do for a living, I guess I'm just an investor. I used to be an accountant. At one point, I was an investment advisor representative. But really, the way I describe myself is as a turd miner. I try to find stocks that are cheap, that everyone hates, and take risks. I try to find companies that are deals. And that's kind of why I'm so frustrated right now. There's not a whole lot of deals out there. And the companies that are down in the dirt right now, they're kind of there for a reason. Art is awesome. I love art. Now, what kind of art do you do? So yeah, I guess the answer is how I make money is I mine for turds. Oh, that's cool. Digital art's awesome. I hope AI is not impacting your business yet. I've seen a lot of jaboofers using AI instead of hiring actual humans to make stuff for them. We don't do that here. You see this header up here above me where it links all the different platforms. We actually paid a human being made that image for us digitally, but still they made it. So I definitely appreciate anyone who can create using whatever tools they're using. And you could argue that AI is a tool, but there you go. Real artists don't use AI. Shout out. But yeah, I'd say I'm a turd miner. The problem is that's awesome. That is a skill. I appreciate people who can draw. I'm more of a stick figure guy myself. I'm not really the best drawer per se. But yeah, I'll do it. You want to see a digital art stream real quick? There you go. Look at me art. I'm arting so hard right now. Can make it even bigger. Boom. And we'll go back to let's give this guy some legs. There you go. I arted. Look at me art. Yeah, head over to Discord. We have a Discord server. We'd love to see your art. That's my art. I'm not very good at art. But that's the beauty of art. You don't even have to be good at it. You can just do whatever you want. But yeah, I would rather pay a human being to do art. But yeah, please join our community and share your art. Love to see it. Anyway, volatility index had an outside month. So it hit a high of 2190 and a low of 1412. So your buy signal on the VIX would be above 2190 and sell signal would be below 1412. And that's on the monthly chart. quarterly chart, you have a big old reversal that happened in the second quarter of the year. And we're trading below that now. It's very counterintuitive because Donald Trump is like volatility incarnate. So to see the volatility index where it's at is actually quite surprising. It says the market is not too worried about things yet. So sorry, I was on Nvidia. Nvidia's still up on the quarter. You know, unchanged on the month. Come back next month, see what's going on. I still like Nvidia based on their report. They're growing revenue rapidly, like at a 50% clip, 33 or something percent clip. And they have like 72% gross margins, so their numbers are crazy. And I sound like a broken record if you watch my streams a lot, but if this is your first time here, or if you've just forgotten, the way I describe Nvidia and why I am invested in Nvidia, I own shares in some of the portfolios I manage, is that we are in an AI gold rush right now, and Nvidia is selling the pickaxes. So they actually are making money off of AI. Microsoft is not making money off of AI. Facebook's not making money off of AI. Apple's definitely not making money off of AI. Google's not making money off of AI. Amazon's not making money off of AI. They're all spending what'll be trillions of dollars by the end of this bubble in a race to see who can get to artificial general intelligence and AI that's smarter than the smartest human, right? The singularity is another shorthand term for that. They're all chasing that. We have no evidence that they'll ever get there, but there is a large group of people in Silicon Valley who are true believers that they're going to get to the AI promised land. But in the meantime, companies like AMD, Nvidia, Marvell, Taiwan Semi, they're all making money off of the capital expenditures of these other very large companies. And it reminds me of the dot-com bubble in that not everyone's going to win. There were a lot more losers in the dot-com bubble of 2000 than there were winners that actually are still alive today. When you think about like all those websites, pets.com, AltaVista, Lycos, Hotbot, Hotmail. Hotmail ended up getting acquired by Microsoft. But like, there's not a whole lot of those websites left standing outside of Shacknews, oddly enough. And maybe some of our colleagues in games media. But yeah, Google was one of the survivors of that dot-com bubble. They kind of rose up after the fact. Apple kind of survived the dot-com bubble because it wasn't a dot-com. But then they invented, they dropped the iPod at the perfect time, and then iTunes kicked off and all these things. Yeah, I dropped the link to the Discord. It's if you look at the Stream Elements chat here and you click on that link, it should take you to our channel, I believe. Yeah, it works. There is a link right there, Amelia. I'll post it again for you. There it is. But yeah, interesting times here. That's the Nvidia chart. Quarter was good. Market kind of sold it off anyway. The whole semiconductor market sold off today. Qualcomm, another semiconductor. No actionable signal on the monthly chart. Quarterly, not a whole lot going on there either. Let's see, what are the other big companies? Tesla. Oof. Tesla is trading inside month potential rev strat to the downside. So what does this mean? You would be a seller of Tesla probably every day because most people hate Tesla, except for the shareholders. Probably be a seller of Tesla below the August low of $297 and 82 cents per share, because you've had 2 consecutive inside months. So it's trying to find price equilibrium, and it failed. It broke out above it only to come back with inside of it. And the data point we got this week from Tesla is that new vehicle registrations for Tesla in Europe are down 40% year over year. That seems pretty bad to me. And the CEO is busy either tweeting AI-generated waifus from his Grok app or spreading misinformation about trans people. So I would avoid this stock. I've said to avoid it all year long, and it's proven to be the right move. Yeah, you can trade it, but my whole point is this is last year, and it's trading inside. I'm only on stream right now, but it like literally right above your post, like right above your chat, there's a chat from Shacknews. That link is an invite to our Discord. So if you click that, you should be able to join our Discord that way. So yeah, Tesla inside year, I would avoid the hell out of it. It's been chopping people up all year long. Everyone thought it was dying earlier this year, then it bottomed, then everyone, happier days are here again, then it sold off again. 2 consecutive months, it traded inside of the previous range. It broke out above that. Okay. Yeah. Yeah, sorry, I'm pretty busy here trying to operate the stream right now. I know there's other people in chat that are managing our community that could help you. But yeah. Yep, we got an art channel. Yep, very true. Thank you, Denny. Yeah, so Tesla. Sell signal below 297 and 82 cents. Taiwan Semi inside month towards the highs. This is a stock trading near its all-time high. So, you'd have a sell signal for the month of September in Taiwan Semi below 223 and 70 cents and a buy signal above 247 and 84 cents. I think Amelia saw how poor my art skills were and was like, I gotta help these people. Which, you know, like I'm a mere stick figure drawer. That's all I am. But I thought it was pretty good. AI art does suck though. Anyway. Where's my mouse? Where is my mouse? I honestly can't find this. I'm gonna just close it. I don't want to save it. Anyway. Let's see, what time is it? 5:51. Got about 9 minutes left here. Let's see. You know, I guess it might be time to finally delete US Steel from my watch list. That's sad. Can't believe they let a foreign country buy US Steel. I thought Republicans were all rah-rah USA. Why would they let US Steel get acquired by a Japanese company? Seems weird. I thought we were all about making stuff here. It's almost like the Republicans are full of shit. I never. Interesting on the bank sector, the XLF, the financial spider, outside month to the upside. So buy signal above 54.14 per share. Let's talk gaming. EA Sports. Close to its all-time high on the month. Did sell off on earnings a bit, but kind of found its footing. I think they're poised to do pretty well here. They got their games on the Nintendo Switch 2, so that's a new market for them this generation. They're doing this thing with the Madden and EA bundle, right? The Madden and college football bundle that's selling rather well. And they have Battlefield 6 coming, which appears to be one of the best Battlefield games we've seen maybe since Battlefield 4. It feels like 10 years ago. I'm one of the admins on there. I'm Earl Divix. You'll see me. I look like Danny Glover. I'm Danny Glover from Lethal Weapon is my avatar. You're still worried about Battlefield 6 because of EA's management. That's a fair concern. But it seems like the market is excited about where things are going. The people I've talked to who have played the game, I haven't played BF6 yet, but a lot of our staff members have, and it's been glowing. The impressions of that game have been glowing in the beta, so we'll see what happens, right? We don't have to predict anything. We can just wait for the games to come out and react, but the time to buy EA, and I guess this is kind of my point in general, time to buy EA was 2013. It was under $11. It's currently at $170. Yeah. So, like, if you think about every misstep EA has had, Bill, since 2013, it's gone up a tremendous amount during that time. And obviously there have been bear markets and there have been sell-offs during that time. But the trend is your friend when it comes to video game stocks, and the trend is higher. Because the video game industry is the most profitable of the entertainment industries. It's also the largest by revenue size. I agree. Like, I haven't liked a Battlefield game since 4. So, and 4, they even screwed up towards the end or the middle of that. So you could argue, like, Bad Company 2 was maybe my favorite one, or Battlefield 1942. Like, I'm definitely an old guy who liked the older games. I liked the Battlefield games when they allowed for private servers. Yeah, BF1 was good, Lucci. You're right. I enjoyed that game. Yeah, that wasn't bad. But 2042 was okay. But yeah, EA Sports in the game, doing pretty well. More video game stocks. Oh boy. Boy, oh boy. Let's talk about this stock. GameStop. Power to the players. Inside month last month. Let's see, did it close above the low? It did. Okay. GameStop with a potential rev strat. Inside month, broke down below it, only to close back within that range. Oh, sorry. I should probably put the chart on. Sorry, I don't know. Did I not have the chart on for EA? Here you go. Let's look at that long-term chart of EA real quick to see you know what I'm talking about. So I was saying back here, if you picked up EA, you're up, 1,000%. More than that. GameStop. Sorry, GameStop monthly chart. You have a buy signal. Amelia, that's a pretty personal question. I actually don't trade this market very much. I'm an investor. I have traded in the past. I'm not actively trading. Because it's, like I said, this is one of the hardest markets ever to trade. But yeah, you shouldn't be asking questions like that. I'm not going to tell you how much I make. We just met. I have staff members who don't know how much I make. Like, I have people who've known me for 10 years that don't know how much I make. I make enough to run my business at a loss for over 10 years. I can tell you that much. Yeah, no, I'm not going to tell you that. And I'm not selling you anything. I'm giving you advice for free here. Let's just say I've made a lot of money. My house is paid for. And I've paid for my car. I don't have any student loan debt. I don't have a mortgage. Yeah, so I'm at the point where I can live off of my investments, probably for the rest of my life. To answer your question abstractly, not to flex either. I'm just saying I've done pretty well. What are the 3 digits on the back of my credit card? Good question. Good question, TJ. Wouldn't you like to know? Anyway, buy signal in GameStop above last month, August high of 23.21. But it's important to note that we are trading inside year. And it's very unlikely that we'll break out of that range, especially when the CEO keeps dumping stock on the market every time the stock tries to rally. So I would avoid it pretty intensely. So are people trying to message me on Slack? I don't know why, but they might be. Yes, we got a stream coming up here. Yeah. Sorry, I got distracted. People are asking me for my social security number in chat. What other stocks? I guess before I go, let's talk about Nintendo. What a lovely yearly chart that is. Let's look at that drawing I got. So it happened. Exactly what I thought would happen happened. Nintendo hit this uptrend. This is an uptrend that has been in place. It's kind of been going on since 2013. Every time Nintendo bumps its head on this uptrend, it sells off. And guess what happened again? We got an outside... This is an interesting pattern. Inside month, trying to find equilibrium, followed by an outside month, stock broke down, went above, only to close right in the middle. So you have a sell signal in Nintendo below $20.31. You have a buy signal above Nintendo's all-time share price high of $24.92. What the hell is about to happen? We don't know. We have evidence that the system, the new Nintendo Switch 2, is selling well. We have evidence that first-party Nintendo games are selling well. Donkey Kong and Mario Kart World. And then just this week, they shipped Kirby and the Forgotten Land DLC. We got a release date for Kirby Air Riders. You have a Pokemon game coming out in October. And it's a Pokemon game that's releasing on both the Switch 1 and the Switch 2. So the addressable market is like 160 million potential people. Not that everyone's going to buy it, but I would say Nintendo is set up to have a good holiday despite the economy, or in spite of the economy, in spite of the president. But yeah, on the technical basis, I'm a bit concerned here, because if we are going to go back down to the lower end of this range, boy, is that a lot lower, and that's at around $11.50 a share. I don't think that's what's going to happen here, but, you know, we do have a newer uptrend we can pay attention to here, and we have yet to break it. So the level I would be watching here in the next few months is around $19 to $19.50 a share, which is like $3 from here on the downside. You know, maybe it was the time to take your gains at $24, but I think with the Pokemon game coming, with Holiday coming, the Pokemon Switch 2 bundle that is going to ship this fall for $500, I think that might be a great holiday gift to any gamers in your life, any Pokemasters that you know. But yeah, actual potential risk range of a buy above $24.92, because you would be buying a breakout above a 12-year uptrend. So there'd be a lot of momentum building there. Or what I think is probably more likely to happen is Nintendo does sell off back down to that 19 level, and maybe it finds some footing. So yeah, interesting times for the Big N. They are experiencing a little, like, you know, I'm still in the process of reviewing the Switch 2. We've been talking about it on our weekly podcast this week in Switch 2. I look at that, promoting my other show. But yeah, the economy's weakening here. People can't afford many things, so a $500 console or $450 console is not great. Since the last episode, Nintendo has had to raise prices on the Legacy Switch 1, because all that stuff, I'm still unsure. It's not that I'm unsure, man. Like, what am I supposed to do? Like, Lucci, let's say you have millions of dollars invested in a company and you sell it. You then have to pay taxes on the millions of dollars, but also forget the taxes. After you pay your taxes, what would you put your money in? Where is it safe to put money right now? You know? Where is it safe to put money right now? I think that Nintendo's management has done a really good job managing through this very difficult economic period. They announced the price of the Switch 2 the day of the tariff announcement before they knew what the tariffs were. They haven't had to increase the price. Yes. I lost you after you said I have millions of dollars. Yeah, exactly. But I'm just saying, even whatever sum of money, you have $1,000 invested in a company, you sell it, you have to pay taxes on that. What do you do with that money afterwards? Where are you putting it? Is it crypto? Is it, are you going to buy real estate? Or, I know you can't deal with $1,000, but like, I don't know, maybe you can in Ohio. I can take you to neighborhoods in Canton that you could buy a house for $1,000. But, my question is like, where am I supposed to go? If I liquidate my account, what am I exactly supposed to do with that money? Because I don't really want to own U.S. treasuries. Because I think that having a degenerate gambler running the country who has had 7 of his businesses go bankrupt is probably not going to care about paying off his debt as the leader of the free world. So the treasuries are out. Corporate bonds are a nightmare because, you know, we're talking about the most bankruptcies we've seen since 2020. I don't really think the real estate market is the place to be. Then again, I own a house and an office in Canton. My family owns a house in Texas as well. But like, I'm not running out to buy real estate right now. Not where interest rates are. So what do you do? That's really the question. It's a frustration I have right now. Because it does seem like if this is the fall of capitalism, this is the beginning of a banana republic here in the United States, or we're well into it, it stands to reason that the billionaires are going to make their lines go up. So I guess what I'm getting at here, and we can probably wrap up the show after this, although real quick, there's the Take-Two chart. Inside month, rev strat to the upside. So you could buy Take-Two above 239.13. But yeah, sorry, that's the last. And also, by the way, I still own Ubisoft. This stock is complete garbage. Inside month, rev strat to the upside in Ubisoft above 219 per share. So a potential buy signal in the turd of all turds, Ubisoft. Ubisoft down from $24.55 per share, currently trading for $2.13. So you'd have a buy signal above this last month's high of $2.19 per share. But yeah, I'm going to pull up the S&P 500 one more time. Maybe the Qs. This is where we're at in the long arc of the S&P 500. I think this will be the ultimate bubble. So I don't think it's over yet. I think they're gonna Thelma and Louise this stock market. So even though the economy, the global economy and the US economy are starting to show cracks, the government doesn't seem to care. And I don't see evidence that they're going to make the market go down. Now, if U.S. consumers stop consuming and they start defaulting on their loans and foreclosures start going up, it may be impossible for the government to hide that from us. But we've seen it in the past. They bailed out the banks before. What's to stop them from doing it again? So in an environment where the government is taking stakes in companies, there's a vested interest for the government to keep the market going higher, either through deregulation or just kind of closing their eyes and not paying attention to secular trends like what's going on in AI. We need regulation in AI right now. There isn't any. We need regulation in crypto. There isn't any. So it's kind of a lawless market. So I always say trade the market you have, not the market you want. And the market we have is near its all-time high. And the market we have is one in which the government is buying stakes in companies, repurposing grants to buy stakes in companies. So it's like we're at an all-time high in the market, but we're also at an all-time high in corruption on Wall Street and in Washington, in Silicon Valley and in Washington. Seeing that parade of CEOs going into the Oval Office and kissing the ring of Donald Trump is pretty ridiculous. Another bit of, I guess I'll just throw this out there. It seems like JD Vance is trying to hint that he's going to be president soon. If Donald Trump were to die and JD Vance were to become president, there's a chance that guy might repeal these tariffs because they're stupid. And that would be a little bit of upside built into the market, or that's not built into the market. But you've heard this term on Wall Street that Trump always chickens out, taco. So this is kind of the taco trade too. But if you're on the same team as the government, and the government is now bullying the Federal Reserve into changing its monetary policy, and rates are going lower, money's going to be cheaper, margin requirements will go down, risk-taking will go up. In an environment where risk-taking keeps going up, it's hard to short this. It's hard to stop this. Yeah. And, he's a couch fucker, too. But, yeah. So, I guess, stock the fucking dollar? There is a dollar ETF. You can invest in dollars. This is called the UUP. It is a index fund that represents the dollar. This is the last 3 years of the dollar here. It's been trading in a downtrend, and we're at the low end of the downtrend. So where do we go from here? Are we going to see deflation? Probably not. Not yet. But this is the problem I face. I always tell people to manage their risk. I don't know how to manage my risk in this environment. So I don't know what to tell you. All I can tell you is this is the rules we're facing right now. You have a government that's investing in companies, repurposing grants as equity investments, interfering in every business, adding tariffs willy-nilly to different countries, threatening a 200% tariff on Chinese goods, but then kicking the can down the road every 90 days. So we have this once a quarter rollover of fear in the markets. I would not buy dollars with my money. I own dollars, but I don't know. I'm kind of at a loss. I don't know what to tell you. My conclusion is that I'm just going to stay long stocks, and I own very few stocks. I own very few individual stocks. Yeah, Mamu, thanks for showing up in the last 3 minutes to talk shit about my stream, ignoring the hour and a half where I actually talked about things. But yeah, I'll leave you with this Nintendo chart. This is my largest holding. I guess at the end of the day, I trust Nintendo's management more than the U.S. government. And I've said that before. And I think that the United States government is not to be trusted. So yeah, I wouldn't buy treasuries. I wouldn't buy corporate bonds. I wouldn't buy real estate. And maybe I just wouldn't buy many U.S. stocks. The stocks that I find interesting are all on their deathbeds. I'm paying attention to Denny's common stock. I'm paying attention to Wendy's. These food companies that are struggling with inflation. If inflation actually ends, maybe these companies can survive. If it doesn't, I think food service is an area to pay attention to because it's showing weakness already. McDonald's, Chipotle, all of them are seeing their margins decline. So it's almost an environment where only a select few companies will survive, and it's the ones that kiss the ring of Donald Trump. So I don't know. I need to do more research on who's going to be sucking up to Trump next week, and you just buy that stock, I guess. But I guess my main point here is they're going to take this market higher and higher and higher until the whole bubble bursts. And we're just not there yet. The AI spending bubble continues. That's what Nvidia told us confidently, that they're going to make $53 billion in revenue next quarter, and that's not including sales to China. So if that door opens for them again, which it seems like it will, because Jensen Huang kissed up to Trump, it's I guess my point is, like, this is unprecedented. The level of corruption we're seeing on Wall Street, in Silicon Valley, and in Washington D.C., we've never witnessed. So buckle up. If you own too many stocks, if you're using margin, I highly recommend getting out of positions, because Trump is volatility incarnate. He's deploying the National Guard to different cities. He is interfering with the Federal Reserve. He fired people from the Bureau of Labor and Statistics because he didn't like the results. He installed someone there who doesn't believe in reporting unemployment stats. So I would recommend people pay attention to what the Federal Reserve is saying when a governor is speaking, or when Jerome Powell is speaking, when the Fed chair is speaking. But yeah, know that Donald Trump is going to appoint someone new as the Fed chair next year. And there's no evidence that they're not going to inflate their way out of this. In an environment where the dollar continues to lose value, most assets will go up in price. Most dollar-denominated assets will go up in price. So that's it. If you like this, give us an old like, follow, and subscribe. This will be up on YouTube in a little bit. Thanks for watching. And I wish I had better news. I really do. It's hard to predict where we're going. We have statistics. We have data. But the people in charge are manipulating the most publicly available one. Yeah, we're playing Sonic Racing here right after this show. So I'm going to go offline so Denny can go live. And by the way, we're giving away a Switch 2 because it's expensive. We're not giving away to international folks, though, because it's almost impossible to ship things thanks to Donald Trump. So anyway, we'll see you next time. I'm Asif Khan. Follow us on all those places above me. All of these things are great. And we'll see you next time. Bye-bye.